Thanks for signing in to RNR Bulletin. I'm Ralph Bivins, and I'm here to update you on the latest in real estate news. Some news that just broke. Hearst Corporation, which owns the Houston Chronicle, has just announced it's buying the Dallas Morning News, which is going to give it 4 major media properties in Texas: San Antonio Express News, Austin American Statesman, Houston Chronicle, and Dallas Morning News. They cover in the waterfront, but that's going to change things a little bit for some of you that follow the news business. I'm the founder of Realty News Report and a former Hearst employee, as a matter of fact. At Realty News Report, we have a podcast. We have online presence with real estate news covering the state and some national items. We have a weekly newsletter, RNR Bulletin, that's subscription based, and we're here to just talk about a few news items. One thing about Realty News Report is we've got 40 years experience covering news in Texas, and that's a lot. So we try to bring that to the table to you guys, keep you up to date with what's going on, especially on the real estate news side and the economy, things of that nature. One thing that did occur very recently is the Houston Association of Realtors put out their June report, and showed that sales are up 12.5% in June. But the big thing here, I think, is this was a record month for the average sale price, average home price, which is now at $450,235 as of June, highest point ever, way up there. The median is $346,000, but the average, if you average all the homes sold in June, it's that $450,000 mark. That's a lot, and especially in this age when people are thinking about affordability a lot. Mortgage rates are still up there in the upper sixes, 6.7%, something like that, maybe, according to Freddie Mac and some others. It's in that area. So affordability is hard. One thing that seems to be drawing up that average sale prices is the fact that expensive homes, $1 million homes, upscale homes are selling at a brisk pace. And when you have that many $1 million homes selling, it's going to push up that average. The rest of the real estate may not be going up that fast, but the $1 million homes are, we're talking about rising up 40% over last year or something. It's pretty incredible. My guess would be upper end of the housing market is not dependent on those people that are buying those houses are bringing equity from other homes, and they may not be dependent so much on mortgages, a 30-year mortgage. They're ready to move up and do this, but they're doing pretty well. The other new item we're talking about here today is industrial real estate, warehouses, logistics parks. It's been a big boom, and lots being built, a lot is being leased, and that's still continuing. The latest numbers, some 18 million square feet is currently under construction in the Houston area, 18 million in industrial space. And that's according to CBRE's new second quarter report. It's been that way. A lot of these new buildings that are under construction they already have, a pretty good amount of pre-leasing, or some. Tenants already committed, and that's just keeps rolling along. The vacancy on that is for the industrial markets now 6.2% citywide, and that's not high, so it's doing good. That seems pretty healthy. There's nothing to be concerned about it. And not like doesn't look like we're going to get overbuilt when your vacancy is down there at 6% or something. It's going to take a lot more than this to get things out of whack. We've had some new projects that just come up in the last few days. Trammell Crow and CBRE are doing some industrial project. Gulf Freeway, some people call it, Interstate 45 and Beltway 8, kind of on the southeast side of Houston. Gulf Freeway, which of course leads to Galveston and NASA down there. They've got six buildings totaling 1 million feet, or just under 1 million square feet, near that intersection. They call it Gulf Belt Logistics Park. Used to not see buildings of this magnitude happening, and we've also had another new deal. Let me mention for the Gulf Belt Logistics Park that's being leased by Jason Dilley and Cape Bell, a couple of agents with the CBRE. Coming up is on 288, Highway 288, due south of downtown Houston, the medical center, all those, called the Griffin 288/West Airport Project. They've got 3 buildings on 40 acres, 568,000 square feet, and Griffin's a local company, and they've been operating this market quite a while. Going in that 288 market, which for years was overlooked, you would think, wow, you can drive from there, you can get to the port, you can get to the medical center area, and very fast. And there's just a bunch of vacant land there for years that people drove by, and nobody built there. But that's changed. There's a lot being built there, industrial and some residential, and other housing. Of course, that whole area was, 288 seemed like it was ignored for many years until, Mr. Larry Johnson Development, took off on that Southwick master plan community a little bit farther south in Pearland, on Highway, or I guess FM 518, also known as Broadway. Larry did that, took over Southwick, which is a failed or stagnant master plan community. It was 1,500, 1,700 acres, and he had Prudential with him. And that went nuts. He sold that out and was promoting, quick commute to the medical center. And it gave birth to a lot of new development out that area. And he started it all. And Mr. Johnson's no longer with us, but he changed the shape of development in this city, in Houston, in a big way. So that's, Farron, Wiley, and Billy Gold are leasing that. I forgot to mention that. Farron and Billy Gold, they've been around a while. They're doing the work for Griffin on that 288 West Airport new development. The office market, well, a lot of people keep talking about the office market. We saw, a national story written by Bloomberg News. They were talking about the vacancy. Houston is known, and office is probably the weakest segment in the entire real estate universe. Some of the things that's gone on there with people working from home, with things of that nature that kind of shrunk the demand for office and downsizing. So it's tough all over. But they noted and quoted Colliers as saying this, that Houston has got more vacancy than any other major market in the U.S., maybe North America. Well, we've got coming out on locally from Colliers, they call it second quarter 27% vacant, which is high. And then there are buildings that are, and landlords that own these buildings, dozens of them are under duress. They're behind on their lenders. We're not seeing the foreclosures in rapid order like we did, back in the mid 80s. But they're under duress, and they're doing different things other than a foreclosure on the courthouse steps, which was the old way of doing it. Now it's more of a negotiated deal, and I think the lenders are just eager to get these buildings in their portfolio because they know there's question marks all over the place. But of course, we saw one of the lenders associated with Houston Center the 4 million square foot project, multi-block project downtown. Went back to the lender, an Australian lender, that could lend some money out to Brookfield, and so that was pretty noteworthy deal, unexpected. And Brookfield's so huge and so strong, you just didn't expect that to occur, but it did. I guess that was about a month ago, or early June or something like that, maybe late May. Changed a lot of things. But of course, it's not all negative. I mean, the big deal is Houston office market is truly the tale of two cities. That sounds trite, but it is the tale of two cities. You've got newer buildings that are 10 years old or younger. Hey, they're doing great. Yeah, that's the old flight to quality thing that they've been talking about. And when I first heard that, I thought, that sounds like a salesman pitch if I've ever heard one. But flight to quality, well, that's kind of, I'm a believer now. It really does happen. The tenants, companies that need office space and want to have people, hey, we're going to quit doing work from home. Come on in back to the office. They have that motivation. And so as part of that, they go to these newer, nicer, heavily amenitized, as they might say, buildings that have good restaurants, good fitness centers, green space, and just the best and latest buildings with, better AC systems and all these things. And, places people can employees could park their bikes and things of that nature. All these, just loads of these kind of things. The newer buildings that have that are doing pretty good. Case in point, the Texas Tower, which was built on the side of the former Houston Chronicle, which 801 Texas Avenue, where I did hard time for quite a while. Houston Chronicle building's been torn down. Hines built 47-story, million square foot plus tower, and it hasn't been complete but a couple of years, and boom, it's 99% occupied. And the rents are phenomenally high. The lenders jumped at the chance to put on long-term financing, mortgage type on the commercial mortgage on it, and they got really strong bids. And that's one side of the tale of two cities. That those new buildings are doing pretty fantastic, and high occupancy, high rents. But the older buildings, they struggle to maintain occupancy and keep the tenants. And on the positive side for the whole market, right now there's very little new space being built. Midway, of course, is active in the city center on the west side. I guess the latest was a 6-story building. I'm sure it'll be very nice in the Autry Park development, which just west of downtown, near just south of the bayou, kind of like West Dallas, along in there. That's not a large building, but it's the most recent announcement that we've seen, and a boutique. But that's probably a niche for it in there, for a nice new building and a park next to a bunch of restaurants, and you can walk down to the beautiful green space along the bayou where people love to be. It's because it's been redone magnificently. It's just fantastic down there. What I'm trying to say is not much new space is being built at all, and so that's a good sign. That's good for the market. It's certainly unlike the early 80s when S&L money was available and savings loan money was available, and developers were going crazy, putting up buildings as fast as they could, of every sort, all kind of. Those buildings are a tremendous amount of space. built in just those from 1980 to 1985, over 70 million feet, which is more than a lot of mid-sized cities have in total. That was a huge chunk of space to put onto the market in that short of time. Those buildings are coming of age. Ugly side of the flight to quality. They're on the side where, people are fleeing from. That's where they're at, and they have trouble. And there are people that have hopes that there can be some conversions. These are solid buildings. They're standing and not, but there's not demand. But what can we turn them into? Apartments, hotels, things of like that nature. And some of that's occurring in Houston, around the nation. Eddie DeBartolo, former owner of the San Francisco 49ers football team, he did a Cullen Center office building in downtown, turned it into apartments, and it's doing well, I guess. But it was a good example of what can be done currently. And of course, Chevron moving from San Francisco to Houston recently, their headquarters. They've already had presence here, but their headquarters. That's a good sign for downtown, and it should lead to more growth. And there's a lot of things happening there. One thing that just perked up on my radar screen, it's not as big as Houston Center, but it's interesting. It's the 5 Houston Center building. It's 27 stories, 600,000 square feet, right by Discovery Green, 1401 McKinney. And that's in play for a sale. And, Real Estate Alert's reporting that that's looking at like $220 million is what they're hoping to get. We'll see. I don't know if that's possible. They've got pretty good occupancy, but this group, Tourmaline Capital Partners, is supposed to be kicking the tires there heavily. It's owned by Spear Street Capital now, but of course it's developed by Crescent, and John Goff was there doing that. He was in on that, and John put that 5 Houston there, and we'll see. There's been a lot more investors looking at Houston lately. Last year, 23, 24, first part of 24, pretty slow. You wouldn't see anybody buying anything, but then a few deals kind of got done. And so people had a feel for what things are really worth in the current market. And the more of those comps you got, the better it seemed like that people were comfortable with what things are really worth. And also probably encourage some of the lenders to say, I know it's worth half as much as it used to be, but that's just the new reality. But I think reality is always a good thing. That helps people get a hold of where we're at. Being an ostrich with your head in the sand, that doesn't help much. We had a story on this on Realty News Report just a few days ago, about retail shopping centers. According to Weitzman, 95.5% occupancy rate for Houston area shopping centers, very high. And it too doesn't have a lot of construction going on. There's not much being built. New shopping centers opening up, and that segment's looking pretty good. 95.5% occupancy, and then we had a lot of retailers, shutting their doors. Isn't that a concern? Big Lots, Forever 21, Joann apparel and stuff. Those have all gone by the wayside. Has 99 cents only. Cons, Party City's gone. And I think they had a number of locations in the Houston area. In case of retail, when the stores that are your tenants are closing, you would think, oh, they better panic. What are they going to do with all that vacancy? But it hasn't worked out like that. They're able to backfill them in a tremendous way. Other stores want to be there. Other stores are looking for space. Nothing new is being built. So in some ways, the owners of the shopping centers are coming out ahead. They've got, some store that in a lower rent rate, and they're gone. And now the market's 95% leased, and they're able to release the space and get better rents than what they had before. So it's worked out pretty good for a lot of people. It's pretty amazing. You've had like stores such as Barnes and Noble, Burlington. It used to be Burlington Coat Factory. They may have changed their name, but Burlington, Planet Fitness, Sprouts, Farmers Market with groceries. They're taking space. They're opening new locations. Dollar Tree is opening some new locations. And a very interesting one, is Cisco To Go. That's SYSCO, Cisco, the big food distributor, huge food distributor. They've opened a couple of, are in the process of opening a couple of retail outlets. When you think about that, their vertical strength there is going to be pretty strong. I think Cisco could be a force. They certainly have access to inventory in a great way and in a lot of areas. And we've also seen, even Trader Joe's, specialty grocery, I guess, they've taken 17,000 square feet in a former Randall's grocery in Kingwood, 17,000 square foot space. So Trader Joe's takes little smaller spaces that there's high demand for them. There's high demand for them. I keep hearing about people writing letters to Trader Joe's and say, "Why don't you open a store here?" They don't. They're really slow to expand when you consider the popularity of when they do open a space. People jump on it. We had 7 Trader Joe's. I think Houston market can handle a few more. I've got this proposal. I was thinking, coming up with a nickname for Trader Joe's. So I thought, well, they hardly ever expand. So why not call them Trader Slow? Because they expand so slowly. And my other choice would be Turtle Joe's, because they move slow as a turtle when it comes to expanding their footprint. Anyway, those are my 2 proposals. So if you got an idea, please let me know. We'll put that to the company and ask them. Maybe we talk to a reporter over the phone. We can ask them, why are you so slow? They claim they're picking it up, but they really don't. The other thing we're seeing here lately is just more and more talk about the Astrodome, which of course is a historic property stadium, and it's more than a stadium. I don't like to hear it being compared to Yankee Stadium. This is the first dome stadium that there ever was, and I would encourage you to listen to my interview with Brad, another voice that's familiar with stadiums and domes and the need to keep them alive, repair them. And he says clearly, and I didn't prompt him to say this, he said, it's not just a stadium. For us, New Orleans, a Superdome is much more. And that's what we're looking at here. So I would just encourage you to listen to that and to think about it. Perhaps there's somebody that might listen to this that would say, have a vision for doing something great that will be on the front page of Time magazine, be written up in the New York Times, get an international publicity. That will be a tourist attraction. People want to come here and just see this transformation that I pray will happen to the Astrodome in Houston. Thanks very much, and we'll check out our website, realtynewsreport.com. Look for the RNR Bulletin newsletter. It comes out once a week. And thanks for listening to this version of the RNR Bulletin. I'm Ralph Bivins. Thanks.